What's going on, brothers? In today's video, I'm going to be addressing a multitude of topics and my thoughts, my opinions on this very uncertainty in the market, what's going on with inflation, why I think a recession is coming very soon in the time frame, how you can prepare, what I'm doing, how you can hedge against massive amounts of inflation and a recession that's coming, and how you can benefit the most. Again, before we dive into this video and we dive into this presentation, make sure to leave a thumbs up button, make sure to smash the thumbs up button, make sure to subscribe to us on Brotherhood Finance. If you've not already done so, check us out at brotherhoodfinance.com. Furthermore, let's dive into this. Let's dive into some metrics, my opinions, what's going on in the market. There is a lot going on and a lot to talk about. So this is from Meet Kevin. He said, the most likely prospect is therefore of a year or more of interest rates in America rising more sharply than the Fed has so far indicated. Now, if you're not sure, obviously they've printed more than 40% of all M2 of all money supply in the past 2 years to keep the money and the money markets afloat, pumping into people's 401ks and artificially pumping that money that we printed back into the markets. Now, some think that that's going to happen forever, but the Fed has actually now become more hawkish. They're starting to realize, oh my gosh, CPI is supposed to come out in a day, so on February 10th, tomorrow, and they believe that it's going to be estimated at about 7%, which is the highest, I want to say, since in the past 40 years or so. So very high CPI numbers. And with that being said, the Fed has made it very clear that they're going to raise interest rates. Almost 50 basis points for the first one. Now, obviously, as it pointed out here, so some forecasters predict that it will raise rates by 1.75% percentage points in 2022, more than any year since 2005. Bumps and slumps. In the long run, an upward shift is likely to be small, and to the extent that this reflects, an investment as well. However, there is a sharp and potential painful rise in rates, and the world's debt have now made up over 355% of GDP, making firms and households more sensitive to these rate rises. Again, when you raise rates, people don't want to spend as much money because it's going to cost them more money to take out loans, and also riskier assets like crypto and the stock market. Not super risky, but those generally do worse as well because people they like to save more money. They don't like to invest because it's going to cost them more money to take out loans and invest. So there's likely to be the sharp and painful rise, as we mentioned. The last time America's inflation fell from over 5% without a downturn, so without actually entering a recession, was 70 years ago. So every time actually that we've had over a 5% increase in inflation, again, right now we're at about 6.7% or so, or around those metrics. We've always had a following recession that has occurred. So that's something to keep in mind. So again, a recession is ahead. Please tighten your seatbelt. This is my opinion. Again, this is not financial advice. This is financial education. So what I was just talking about before is if you look at this chart right here, the gray is any time we've actually fallen into a recession. So anytime we've reached these high CPI numbers, we've generally fell into a recession. And the only time we didn't, I want to say, was in 1951 when we went into war with Germany. And we actually didn't fall into a recession when CPI, Consumer Price Index, or otherwise known as inflation, was above 5%. So this is another indication. See right here, inflation above 5%, recession. Inflation above 5%, recession. Inflation above 5%, recession. So pretty much in every single one of these, you could see even in 07, 08, inflation got above that 5% metric, recession. So that's something to keep in mind. Now, you're going, well, what if I just go straight cash? So it's very hard to time these money markets. However, I would say you should be sitting on more money now than you were prior because, again, they're not artificially pumping everybody's equities markets and everything right now. And with the Fed raising rates and being more hawkish, it's going to be harder to see those higher returns in the market, in my opinion, overall. So I'm holding more cash. I'm holding gold and silver. I'm also still invested in crypto, and I'm also still maxing out my Roth IRA because time is your best asset, and you'll never get that time back. If you have not checked out that video, make sure to check that out, a Roth IRA tutorial. But to beat a 9% return on the buy and hold over the last 150 years, you would have to be, 77% correct when you pull your money out, timing it. That is very hard to accomplish. Nobody knows what the markets are going to do. Remember when COVID first hit, everybody thought we were going to fall, but then the market, who would have thought that they were going to artificially pump more than 40% of every U.S. dollar into the money and equities market to keep it artificially pumped. So that's also keep in mind. Now, from 1869 to 2018, there was a total of 30 recessions. And out of those 30 recessions, in 16 of them, you actually made money. Now, what is considered a recession is 2 quarters back to back of negative GDP, negative economic growth. So if that occurs, then we are actually officially in a recession. Now, nobody knows exactly what's going to happen, but the person I just addressed, me, Kevin, he's actually extremely bearish. He had over $25 million in his equities portfolio, and he actually pulled out because he thinks a big recession is coming. And I've talked to some other, very intelligent people and intellectuals, and they've also been warning. And we all have known, we've talked about on this channel, a big crash is coming. You can't print all of this money and not expect there to be a dump in the equities market, in the housing market. Everything is artificially pumped up with the Fed raising rates. That's also more hawkish and more bearish. That's not to say that technology will not advance. We will not overcome this. But ever since 1971, when President Nixon took the dollar off the gold standard and cash became trash, and we've always artificially pumped the money into the markets, we've been needing a big crash and a big recession to happen. And some believe actually it's going to cause the Great Reset, but we're not going to be diving into that today. So out of that, there's been a 0.7% to a 38% gain in those money that was made in those recessions. Again, as I was talking about GDP growth and stock, they don't have any relation really, near zero. But out of those 14 recessions that were actually recessions that you lost money, those lasted about 18 months. So that's one of the things we talked about, rising interest rates. We talked about a lot of money being printed, over 40% of every U.S. dollar, with them raising rates. That's bearish. Obviously the markets are almost at an all-time high right now. You've got big people like Warren Buffett is sitting on the all-time high cash he's ever sat on. I think he's sitting on like $146 billion with a B. Elon Musk started selling some of his shares, Jeff Bezos. They know a crash is going to occur. It's just a matter of time. So let's talk about another thing I want to address that ties into my hypotheses of why I believe a recession is coming up very shortly. So this is China's share of global domestic product, GDP. Again, it measures how much it contributes to the globe. And if you look right here, in 2021, they were about 20%, 18.72%. So not as much as America, but a quite substantial amount of the world GDP, gross domestic product, is coming from China. Why is that important? Well, if you didn't know, China actually has Evergrande, which is theoretically pretty much a huge cities, a multitude of cities that they've built that are vacant. And they have to owe money on said Evergrande debt because none of the money, and there's no occupancy. There's no one living in said developments that they built. Now, we had this happen before, but it was actually a small amount that they owed for the Evergrande payments. And we're going to be addressing what's actually coming up here very soon in the markets. Again, there's already a lot of fear, already a lot of uncertainty in the markets, and a lot of very wealthy individuals that are preparing for this crash. I mean, Robert Kiyosaki's been addressing this for a very long time. So I think it's only a matter of time, but let's keep diving into some of this information. So, at the end of 2020, China's foreign debt, including U.S. dollar debt, stood at roughly $2.4 trillion, and corporate debt is $27 trillion, while the country's total public debt exceeds 300% of GDP. So, America's exceeds 300% of GDP, and China's exceeds 300% of GDP. Now, if you look right here and you keep reading, GDP ratio is growing at a rate of about 11% a year. And China's GDP has grown by less than 11% annually for the past 11 years. Its debt is outpacing its GDP growth. So what that means is the country is actually starting to become negative. It's not starting to grow as much. And the GDP has grown by less than 11% annually, which means the GDP is not growing. So you have a situation where you have America, you have China with a huge multitude of debt on their hands. By the way, the U.S. just surpassed $30 trillion of debt on their balance sheet. They're printing money out of thin air. You can't artificially just pump money and print money and not expect. We're going to be paying that money through taxation. There's going to be a big recession, if not a depression ahead. It's all going to depend on a multitude of factors, but you need to prepare. You need to become educated. That way you can position yourself properly for when that time does come. Because as Robert Kiyosaki likes to say, the best time to get rich is actually during crashes. And as far as cryptocurrency goes, I think cryptocurrency in the next 10 years is going to create the most millionaires ever in U.S. history. The reason I say that is because if you look at the rate at which it is growing, it's growing at almost twice the rate of the internet did from the 1990s to the early 2000s, and there's supposed to be over 1 billion users in cryptocurrency by the year 2024. It is growing at a fast rate that's not even comprehensible and understandable for a multitude of people to understand. So that's important to keep in mind. So why is this important? Why am I bringing up China? Well, 29% of their GDP, of the 20% they make up of the globe, is actually their real estate market. And I expect that they will try to help, the property sector out this year. But I think the market faces years of stagnation, and it's very frightening to really, put this into perspective. These are kind of what some of the cities look like, and it's incredibly difficult to measure, and it's incredibly difficult to say if and when things might actually go pear-shaped, because the government has done an incredible job at managing the prices, they say. However, the whole thing could fall apart. And they're trying to ensure that doesn't fall apart. But the importance of the property market and the extent to which it's actually a bubble propping up the prices. So that's something to keep in mind. Now here's some other examples of things that have been happening in China. Shimio Group's Shanghai unit defaults on a $101 million project loan. Chinese developer defaults on a $175 million loan for the Super Tall site. Now, this is actually the Evergrande fund, so it's doing tremendously well. It's down 93%, okay, in the past 588 days. So it's really been doing very well as a stock. That's some sarcasm there. But Evergrande has just the stock has been getting destroyed because obviously they're having all these defaults. Why am I bringing this up again? Now, if you look right here, March 23rd, 2022. Now, currently, it is February 9th of making this video, so not too far away. They owe $2.1 billion in principal that they have to pay on their payment. They had a hard time making those $1 million ones. Now they have a $2.1 billion one that's due, and coincidentally enough, right after that payment, in April 11th, they have another $1.5 billion payment that they have to make also. So that's very imperative to keep in mind. Now that we have that, so we have high interest rates, we have a substantial amount of money printing, we have the Fed being more hawkish, we have a lot of uncertainty, and we have a lot of money printed, as we mentioned before. We have markets almost at all-time highs. They're actually starting to formulate, if you look on the charts, they're starting to form all-time highs and all-time lows. Right here, you can see this is where they artificially propped up the market when we print all that money. Nobody would have saw that coming, but the Fed just wants to print money out of thin air. So, and we have Evergrande, and we have the China problem. And, with all that being said, also there's Russian war that could possibly happen, and with not Germany, but either way, there's the Russian war that could happen right now with Russia wanting to overtake Ukraine is what it was, and there's some other tensions that are also occurring. So in the midst of all of that, in all the big bubble that should have popped a while ago, we have this market right here. And if you look at the stock market, you see the RSI right here. We're getting very similar levels to where we were getting in 2007, 2008. So the risk reward for me is just not there. Again, I still hold some money in crypto. I still hold some money in my Roth IRA. I will always max out. I don't care if it drops 80% because I'll never get that time back for the Roth IRA. And I'm following, again, Warren Buffett's strategy for the Roth IRA. But just important to keep in mind is we're forming all-time highs and all-time lows. Now, if you look right here, we had pretty much the same thing occur. This was 08, 09. We were forming all-time high, all-time lows, all-time high, all-time lows, and eventually we had a 56% decline in 08, 09. So when it comes to Bitcoin, it's almost the same thing. Now, I'm looking to see if we can break 44,500, and I'm also seeing what the SEC has to say about crypto. Here in the coming months, they're going to be addressing it. How, I know Biden declared as, a country emergency or a state of emergency that they need to figure out, which, whatever. If they can figure it out, we can have some Bitcoin ETFs, Ethereum ETFs. But again, there's a lot of things up in the air, and there's a lot of uncertainty in this market. So it's not important. It's very important to maybe, keep some cash on hand, maybe 30 to 40%. Always stay invested in some shape or form, unless you're very bearish and you think, there's going to be a crash very soon, which I have talked to some people that are going all liquid cash. And they're preparing for this crash because, again, the best time to create real wealth and get rich is during the crashes. Warren Buffett, you buy when there's blood in the streets. Now, when it comes to Bitcoin, if you look at some of the past crashes, you can see here we've had these lines right here cross on the RSI. And that's actually just about to formulate right now. So after the 17 one, we had it right here. And then after the 13 one, we had it happen right here where they both crossed the line. So that just occurred right now. So that is more of a bearish outlook. But again, if we can surpass 44,500, the SEC does good. And inflation does not affect the equities market terribly tomorrow or when the Fed raises the rates 50 basis points, as we mentioned before over this first slide shows. Then that will be good for the markets overall. I'm not saying the cryptocurrency bull run is over, but I'm saying based on a multitude of factors, there is a lot more fear in things that are happening in this market, and we could be headed downwards, okay, based on a lot of things. It's going to depend on what the Fed does, if they stay hawkish, if inflation stays a lot higher, if Evergrande defaults, if the equities market continues to do bad or not. It's going to depend on a lot of factors. But this is what I sent my dad, because again, I do a multitude of research, and I said this to him. I said, there has only been one time when inflation was over 5% and they raised rates that we did not go into a recession. That was in 1951 when we went to war with Germany. Just some insight, always doing a lot of research. So again, that is kind of my overall thoughts. I am a little more bearish than I am bullish. Again, this is not financial advice, it's financial education. My thoughts, my opinions, how I'm forecasting everything. If you not had the opportunity to do so, again, there's a multitude of opportunities that embrace themselves when we enter bear markets. I plan on buying a lot more of crypto as I think it's going to have the highest ROI and upside. Real estate, especially if I see these big crashes like I think is going to occur. And same with the equities market. The best time to get educated is right now. If you found value in this video, please make sure to leave a thumbs up. Make sure to smash the thumbs up button. Leave a comment. Are you bullish? Are you bearish? What's your thoughts? What's your opinions on this video? And check us out at brotherhoodfinance.com if you want to cop some merch or a multitude more of financial education where we have packages and products that can set yourself up and others with everything you need to succeed and achieve financial freedom. Again, as always, I hope you found value in this video. Again, I'm not, being negative. I'm just, giving you the Carfax, so I hope you found value in this. Have a good rest of your day. Have a good rest of your weekend. I appreciate you watching all the way through. Thank you so much. Peace.